Snowflake, a cloud software company, is debuting on the New York Stock Exchange today, and the IPO price was recently upped from $75 to a whopping $120 per share. The key question that we face here as investors is, are we experiencing a tech boom like we have seen in 2000? My name is Jean-Paul van Oudheusden. I'm a professional with 25 years of experience from ABN AMRO Royal Bank of Scotland, and with Markets Are Everywhere I aim to educate retail investors and also professional investors on the things that happen in the financial markets. I have here a short video for you on the key things you need to know from the Snowflake IPO.
So what's the news today? Snowflake. It's a data cloud storage company, debuts on the New York Stock Exchange today on the 16th of September 2020. The IPO price is set at a whopping $120 per share for a company valuation of around 33 billion. For the Dutch crowd watching this video, this gives the company a valuation higher than companies like ING or Ahold Delhaize, and it would easily be in the top 10 of the Dutch AEX index. However, it's the largest US software IPO. It can be considered a pure play on cloud data storage, a rapidly growing area of tech. The initial price range was set at 75 to 85 US dollars per share. Mind you that the company only in February 2020, it was valued in a funding round at 12.4 billion. So now today we're looking at a valuation of 33 billion US. And the key question here is, are we experiencing a tech boom like in 2000? What does Snowflake do? It's cloud services. And the key thing they add to the existing market is that they work together for clients with Google Cloud, with Amazon Web Services, and with Microsoft Azure. So you go to only one provider, Snowflake, and you can collect your data from all the platforms. So you're not locked in with one of the existing players. The key thing about data storage is all about big data. Companies wherever in the world sit on a lot of data, and with the new technology they can extract a lot of value from this client data and product data they sit on. So this is what Snowflake intends to do. They believe all companies in the end will move to the cloud because you can extract new revenues as a company from the data that you sit on. Are they alone in this area? No, definitely not. The existing players are Amazon, Alphabet, and Microsoft. Each of them has a data warehouse product in-house. Amazon is the market leader with their product Redshift. They have around 13,000 customers. Alphabet has BigQuery. Microsoft Azure works with Synapse. And you see Snowflake is the newcomer. They have 3,117 clients, but in the last column you see that their year-on-year growth rate is massively higher than the other ones. Amazon just sticking at around 5%. So the difference is Snowflake combines your data that you may have on all of these platforms, and a lot of clients like that because they don't like to be locked in by one of the major players. Said it before, in February 2020, they did an additional funding round. It's so-called Series G funding round. They attracted 497 million US dollars, but more importantly, they struck a strategic partnership with Salesforce. Salesforce was not only putting in money through Salesforce Ventures, but they also are now a strategic partner of Snowflake. And it leaves not a lot to imagine that, you know, if Snowflake can access the client base via Salesforce, then there's a lot potential for future growth. That's also what Snowflake CEO Frank Slootman, a Dutch guy, recognized. And Mark Benioff, the Salesforce CEO, the company that recently entered into the Dow Jones index, mind you, was very keen to do this deal. Now, the headline today, at the day of the IPO, what is written everywhere, of course, is that also Berkshire takes a part of the IPO. This is really worth mentioning because as far as you go back, you know that Warren Buffett never ever went into IPOs, or at least I cannot imagine the last time he did so. And besides his stake in Apple, he was not really very fun in early tech investments. So as a sidestep, you know, you really see here at Warren Buffett, given at Berkshire Hathaway, given the age of Warren Buffett, that his deputies Todd and Ted Weschler have more and more to say in the investment that Berkshire makes going forward. Let's have a look at the reported figures at Snowflake, because this is what everyone is so excited about. Fiscal year ending 31st of January, revenues were plus 174%. Losses were mounting as well. The company has never made any money, but you see that more often with young tech companies. Also, the last 6 months ending 31st of July were looking good. Revenues were up 133%. Losses were lower than the comparable period year before. And yeah, are we experiencing a tech boom like in 2000? What you see here, if you take my opinion, is dressing up for the coming IPO to look good. TechCrunch, which is absolutely a website you must follow if you don't know it, for news on tech companies and also IPOs in the direction. I copied here apart from their website on the margins, because it's not only the revenue growth, but why everyone is so excited about the cloud segment within tech is that margins are sky high. You see them here, they're even increasing, but they are so good that it makes you also think, you know, what's going on here, and especially when the company comes to the market for an IPO. So let's have a look at the winners, you know, who are profiting from this IPO. First of all, the CEO and the management, and where I say CEO, it's actually two CEOs, because the founder and former CEO, Bob Maglia, is selling out heavily. Part of his shares, half of his shares, go directly to Berkshire Hathaway. And Frank Slootman only joined the game 2 years ago, and he has done this game before, twice before, and his last company, ServiceNow, is now valued at 90 billion US, and recently been taken up in the S&P 500 index. So he knows, and he has a track record in this direction, but he is not a long-standing Snowflake guy. Venture capital firms are heavily involved in this company. I found this list, which is very interesting. The last funding round in February was also Series G, so you can see a lot of room for VCs to come on board. And you see them here listed on the right, and they all have they will make a lot of money on this IPO. And together with the employees of Snowflake, they obviously have an incentive to cash in. Yeah. So when the lockup period is over, there will be possibly quite some pressure on the shares of people backing out. Although if you look at a company like Adyen in the Netherlands, that was also said in the beginning. I still know this company went public somewhere around 400, 500 euros, and it's now at 1400. So that doesn't mean per se it is a bad deal. There's a lot of people who profit from it. But you, as a retail investor, if you consider going in, then mind you that also there is today a very heavy pre-IPO market. EquityZen and Forge Global are platforms, examples of platforms where people have been trading this stock already, and that will certainly have contributed to lifting the IPO price to $120 per share. Jim Cramer, who I like to follow on CNBC, the host of Mad Money, made this terrific picture of upcoming deals. Snowflake is the first in a row, and that makes you wary. You know, if so many companies at the same time come to the market, yeah, there's a lot of money around, but you can't buy them all. And we have to see how the market absorbs these deals. Not all of these deals are cloud data plays, but many are. So yeah, it's a warning sign to look at. And to put you with your feet back on the ground, Alteryx is in the same segment. It's a company that went public in 2017, so it's been around now for 3 years. A very good line, but with ups and downs. And after the second quarter of this year, they missed their earnings estimate, or actually they gave an outlook guidance for the future that they say growth in the third quarter is slowing dramatically. The share price dropped from 175 US to 110 in only a very short period of time. And what I mean with this is that the revenue figures of Snowflake look so good. If they miss out on that for a future, if the growth would come down, then yeah, you can easily get a lot of pressure on the stock. So let's have a look at this picture again, which says it all for me. My self-composed picture with data from stock news. Snowflake is now very popular because it has such a high growth rate. But if you see the incumbent players, Amazon, Alphabet, Microsoft, are much lower growth rates. And besides, they won't let Snowflake easily take all their customers. So they have a lot of money, so they could fight back, putting in a lot of money to defend their market shares. And I'm very hesitant to see this as a positive sign. In sum, yeah, I would, if you're a private investor looking at some very nice deals, as it's written in the cloud here, I believe you'll get a second chance. Don't rush to buy it now. Watch what will happen if you're interested in cloud. The business is no doubt going to be important going forward, but wait for your second chance to get in at a lower rate. Now, if you like what I'm doing with Markets Are Everywhere, subscribe to our YouTube channel and get more of these videos in the future.